This year in February, the market started falling and the trend has continued. Amidst bloodbath in the market, no share has remained unscathed. It seems FIIs are also selling at a rapid pace. Local investors are holding on to cash and are confused about what to do in such cases. That's the reason even good shares are down by 40 to 50% in the last 5 to 6 months. Shares like Asian Paints, Nestle, Bajaj Finance, HDFC Bank, SBI, Infosys, Jubilant Foods or even Tata Motors. Even these blue chip stocks have been beaten down. These are those selected stocks which you will find in portfolio of big mutual funds. Analysts also suggest the name of these stocks for long-term purposes. But right now, the situation is so dire that these ACE shares are trading below their long-term average, which is 200 DMA. Trading below the long-term average means that the shares are in a bearish zone.
However, amidst all this, there is a question in the mind of investors: whether to buy these shares at a cheaper price. Should you keep averaging on smaller price and take good returns? Another question is, what if this fall doesn't stop? What if you end up becoming an owner of the company while you're averaging? What will happen then? So, for this decision, you have to look at factors like higher inflation, selling by foreigners, expensive loan and so on. For example, FIIs in 2022 have till now sold shares worth 1,62,000 crore rupees.
According to one report, from 2009 to 2020, FIIs invested 2.95 lakh crore rupees till now and 3 lakh crore have been withdrawn. This means selling figure is even bigger than the buying figure of the last 12 years. And this money is flowing out of these consistent compounders. Yes, these companies are debt-free rates and higher interest rate won't put a burden on them. Geojit Financial Services Chief Market Strategist Anand James said, while fighting inflation, the government is ready to let fiscal deficit slip. This will keep the rupee weak, and due to this, buying shares will be easier and cheaper for foreign investors. Now let us come back to the question, is this a buying opportunity? So some analysts think that there is a huge fall in the market for such a long time and now there are buying opportunities in them. Because this is the indication of the market bottoming out. This means in the next 2 to 3 weeks there can be a strong recovery. So even though during recession a lot of things have been damaged and some shares are looking lucrative, take time to create your portfolio and wait for the storm to subside.